If you are looking at your screen right now and feeling a pit in your stomach, take a deep breath. You are witnessing what the mainstream media is calling a precious metals bloodbath. Silver has just suffered one of its most violent single-day drops since 1987. Gold, which was testing $5,600 just hours ago, is being slammed back towards the $5,000 level. The 98% of the population who bought into the hype last week are currently hitting the sell button in a state of absolute panic. They are FOMO selling because they don't have a plan. Welcome to Money and Power. You are here because you are part of the 2% Club. We don't trade on emotion. We trade on math, common sense, and the gold to silver ratio. Today I'm going to show you exactly why this crash is happening, why the US dollar is suddenly fighting back, and why the number 57.4 is the only thing that matters if you want to protect your wealth while everyone else is losing theirs. Now, before we dive into these historic numbers, if you value a voice of reason in a world of clickbait and panic, please like this video and subscribe to the channel. It's the only way to ensure the algorithm keeps you informed when the markets turn this violent. And a sincere thank you to those of you sharing these updates on WhatsApp and via text. It is how we grow this community of rational investors. Let's get straight to the why. Why did the floor fall out from under us today, January the 30th, 2026? Well, it started with a name, Kevin Warsh. That's W-A-R-S-H. President Trump has officially nominated Kevin Warsh to be the next chair of the Federal Reserve. The market was expecting a yes man who would print money and cut rates blindly. Instead, they got a hawk. Warsh is a man who defends the dollar and understands the dangers of debasement. The moment that name was confirmed, the dollar debasement trade hit a brick wall. The US dollar index, that's the DXY, spiked. And when the dollar goes up, the paper price of gold and silver, denominated in those dollars, gets crushed. But there's a second layer to this bloodbath, the Microsoft meltdown. Microsoft just saw a $400 billion wipeout, the second largest in history, due to slowing cloud growth and massive AI spending. When a Magnificent Seven giant like Microsoft drops 12% in a day, it triggers margin calls across the globe. Big funds aren't selling gold and silver because they hate them. They're selling them because they have to raise cash to cover their losses in tech. This is a liquidity event. The 98% see the price drop and think, the story is over. The 2% Club sees a fire sale caused by a tech crash. Now, whether you're in London, New York, or Berlin, the pain feels slightly different depending on your currency. As of 1944 tonight, that's GMT time, gold in sterling terms is £3,598 and silver is £62.65. That's a gold to silver ratio of 57.4. The US dollar is 4,926 for gold, and for silver is $85.95, and that's a 57.32 GSR. And in euros, gold price is 4,149 euros, and the silver price is 72.15, and that's a 57.51 ratio. To my American audience, that's 40% of you, you are seeing the most violent move because of the dollar rebound. You saw silver drop from $120 to 85. It feels like a collapse. But look at the ratio. It is holding steady at 57.1. To my UK and European viewers, because the pound and euro are weaker against the dollar today, your local prices haven't dropped quite as far. You're seeing the hedge in real time. While the American is seeing a 30% drop, the UK holder is seeing a consolidation. This is why the gold to silver ratio is the only universal language. A few days ago, the ratio was 46-1. Silver was overheated. I told you then to remain calm. Now, at 57.4, the ratio is returning to a value zone. The 98% think silver is dying at $85. The 2% club knows that at 57-1 GSR, silver is simply taking a breath after its biggest monthly run in 46 years. Now, I've been reporting this on YouTube for over 10 years, starting with the original Illuminati Silver channel. I have seen blood-bathed Fridays before. In April 2013, gold dropped 13% in 2 days. In March 2020, silver dropped to $12. Remember those times? Every single time the headline said it was the end. And every single time the 98% who sold at the bottom regretted it for the next 5 years. The reason I relaunched this channel as Money and Power on the 23rd of November 2025 was to be that voice of reason. My YouTube competitors, if you want to call them that, are currently making videos with silver to zero thumbnails to get your clicks. They want you to panic. I want you to calculate. When the ratio is above 80-1, we buy silver. When it is at 50-1, we hold and watch. Today we're at 57.4. We are in the observation zone. If this ratio climbs back towards 70-1 because of this Warsh Shock, that isn't a reason to sell, it's a reason to look for value. The industrial demand for silver in 2026 hasn't changed. The solar panel requirement haven't changed. The silver deficit is still here. Only the paper price has moved. Now, because these markets are moving with record-breaking volatility, I need to be able to reach you faster than a YouTube upload allows. Many of you are watching this on your Gmail accounts, to which I assume your YouTube is linked, and staying for the full duration. Thank you for that. It shows me you are serious. I'm currently finalizing the Money and Power newsletter that I hinted at previously. This will be a direct line to the 2% club, where we can discuss these ratio triggers in real time. When the gold to silver ratio hits a rotation trigger, I want you to have that data immediately, not 12 hours later after the move has happened. Now, if you want to be on that list, stay tuned, as I'll be dropping the link very soon. Not today, but very soon. So what is the action plan for tonight? Well, 1, don't look at the dollar value of your stack. It's irrelevant during a liquidity squeeze. 2, count your ounces. You still have the same amount of metal you had yesterday morning when the price was at a record high. Unless, of course, you've sold. And 3, watch the $85 level on silver. This is a technical line in the sand. If it holds, this bloodbath is just a healthy correction. So to wrap up, the 98% are currently FOMO selling their future for a temporary sense of safety. They are trading hard assets for a currency that Kevin Warsh, as hawkish as he may be, cannot save from the $36 trillion debt mountain. We are the voice of common sense. We remain calm while others panic. We understand that a 57.4 ratio is a sign of a market resetting itself, not a market dying. If you found this breakdown helpful, please like and subscribe right now. It helps us fight the hype and keep the 2% club growing. And don't forget to share this video on WhatsApp with that one friend who you know is panicking about the price today. Help them stay rational. I'm Richard, and this is Money and Power. I'll be back tomorrow to see how the weekly candle closes. Now, if you want to understand the long-term cycle that led us to this $5,000 gold level, you need to watch the video on the screen right now. It breaks down the debasement roadmap that is still very much in play despite today's volatility. Thank you for watching, stay steady, and I'll see you in our next video.